What's up? It's been a couple of days. I think the last stream I did was like the 6th of October, so sorry it's been so long. It's been like a good fortnight, but I've been around. I've been on B's Discord, and yeah, I thought I'd jump on because there's actually a pretty important moment right now as far as the charts goes with Bitcoin. So there's a technical setup going on. Let me just hide some bits and pieces here just so we can see what's going on. So yes, indeed, Crypto Ape, we did break a downtrend that's been in place since late May. So basically, let's call it the 1st of June. It's been in a downtrend and we've just popped our head up over that. And we're gonna see if we can get an attack on 20,000. See if we can get that resistance broken. As far as, let's check out the oscillators on the daily. You can see that on the daily chart, Bitcoin has been floating around with the neutral line. So a 50, a perfect 50 on the RSI for some time now. It's just been chopping sideways and it's been very frustrating, but I think, what's it been, over a month now? How many bars is this? 39 bars, yeah. So over a month we've been chopping sideways just under 20k. But now we are we're on our way up. Hopefully we get that break of 20. This is a very promising candle to get some kind of, relief rally. So we all know this was the first proper rally up relief. This one, not so much. It wasn't really a rally. It was more, well, I guess you could say it's a short-term rally. Like it went over the course of just a week, whereas this was like a good month and a half. But it'll be interesting to see what kind of action we get, if at all, out of this now that we've broken all these long-term trends. So we've got the all-time high trend here coming down. We broke that a couple of weeks ago actually, and we were riding it as support on the upside. And then yeah, finally established a higher low here. So that's a good sign, that's a good start. What we need to do is get above this high and this high to make a clean break. But we'll see how we go. Might take a while. 1 second. So yeah, it is really looking good. We've got about an hour and a half to go until the daily close. Not that the daily close seems to have too much bearing on our price action lately. It seems to be mostly due to the legacy markets, so like the stock market, especially the New York Stock Exchange. Like the New York markets seem to have a pretty high bearing, being the largest market, the largest equity market, as far as stocks go anyway. But Clive in the chat says US futures opened deep green, so that's a positive sign. I'm just gonna have a look at the dollar index, the Dixie, and yeah, it's interesting to see this double top here and an overall lower high. at least for now, yeah? So I think there was a bit of a wedge pattern forming here on the Dixie, right? You had this going on, a rising kind of pattern here, a rising support, but then a resistance here. So that looked kind of, you know, bullish, or it does look bullish. There was, of course, like the fake out right here, and then the subsequent breakdown. We'll see how it copes moving forward, because if I go out on the daily, you can see it's got a nice parabola that it's been following for some time now. So if we can get this to break, I think that'll be pretty significant moving forward. Like, we might be able to break this structure and really start correcting off this insane run that the dollar's been on. And that'll only be good for Bitcoin. So right now we're attacking these highs right here, as you can see. Currently, it has not broken it yet, but I think there's a fair chance that it might. I'm just going to put in a line there just to sort of keep an eye on that. Maybe a dash line, just so we can tell the difference. All right, and yeah, Forex has been open for like 36 minutes now, I think, so see how we go. One moment, please. Just all right, so right now, yeah, that is the immediate resistance in front of us. It looks like the RSI on the hourly chart is very cooked. It's gone up pretty significant here. We're like, what's this? This is probably like an 85 almost on RSI. So it wouldn't surprise me if, yeah, we've tagged this resistance here, and we pull back a couple, or even just one bar, just to cool off from that huge rip before, you know, finding support and maybe taking off and attacking the 20. But at least with Bitcoin, it can do some pretty crazy things, like this move here, like this explosive move from, what was it, down at like 18.2 roughly, well, exactly, basically, to the dollar, 18,200 all the way up to almost 20,000. That's insane. Pretty impulsive inside of a day, I think that was. Yeah, yeah, pretty much inside of a day. Oh, definitely 13 hours. Yeah. Okay. So really nice move. And we've been starved for these kind of moves for so long now that any move that goes in the range of $1,000 is pretty impressive, or even 2,000, you know. But I think yeah, we've been coiling up for so long now that this is inevitable, right? We have to move out of this. Basically, it's like a holding pattern, really. But I'm just gonna fix up these levels here. Okay, might be a bit clearer to see what's going on. So just in comparison with the last, you know, 12 months of price action, you can really see how dramatically flat we've been in the last month and a half. We haven't been that stable or steady for since, back here, back in like mid to late 2020, before the huge hike. So you can pretty much see what results after such a flat period. You get an increase in volatility again once it breaks that compression. We got some through here. Unfortunately, the break was down in this case. Well, fortunately for the buyers, right? Because then they got half price Bitcoin, basically. Let me just see where that came from and went to. So, yeah, basically $6,000 floor going down to an almost $3,000 floor. So that's, a 50% drop from that point. If that was to happen right now, where would 50% down from this floor be? Let's call it about here, right? That would take us down to about 9,000, give or take, 9,200. So, yeah, that's still very much on the cards. We could get a final flush down to, those lower numbers, but this structure here tells me, like all of these lows here tell me that there's a lot of interest in accumulating. Every single time we've dipped, it's been bought up, it's been recovered. And I know that was kind of the feeling back here too in 2018, right? Everyone was like, yeah, we've found our floor here. Everyone's like, we found a point of demand, right? Until it completely broke. But, there's also examples of it holding, right? Who's to say that this here isn't the equivalent of our 30K? You know what I mean? So pretend that's 30K Bitcoin here, and then we've got that flush down to 17 here, and then we've been holding support, right? I think that's pretty reasonable to kind of suggest, I think. So here's the comparison. Flush down, there's the final capitulation, potentially, right? And then you've got the floor, the true floor, which is kind of like what we had back here, right? Final capitulation down to the floor. So we'll see. I mean, I don't want to say anything's definite or locked in, but that is another kind of take on that. Because a lot of people are suggesting that this here at 17K is where we were at 6K right here, and that we're going to get this final knockdown 50%, right? So, yeah, I guess the best way to approach it is to keep an open mind and don't be so fixed in one direction. You got to have, keep your mind open to the possibility of us moving up from here and also moving down at all times in all markets, right? Otherwise, and that way you won't get caught with your pants down, so to speak. All right. So if I go back out on the hourly chart here, we're still, this is still posing as resistance here, this high. And we need to get to break through this. So if we break 20, that's higher than this previous high as well. So that would be an even better sign. Just going to check the dollar index. So there's a potential resistance found here. So this line here, this yellow line that I have here, is actually support from back here. So I'm out on the hourly chart here. You can see there's a few instances of support at that range. It was previous resistance here. So we just need to break that structure and come down, and obviously break that parabola. But for now, I think, yeah, we're just waiting on the main market to open, which that'll be in about, what's that? Let me just find the chart. So the New York Stock Exchange will open at 9 hours and 14 minutes. So that's not terribly long. The futures markets, though, just what Clive was referring to, they've already opened. So, and they've made a massive move up here, getting above those previous highs. So there's the previous highs there. Currently stalling at these highs. See if we can break it. Go out into the 4 hour. Yeah, there's a lot of structure to get back up on top of, but you can see there's like an inverse head and shoulders right here. Let me go to the 1 hour and zoom out a bit so you can see it better. So pretty much what I see here is obviously the downtrend here. Left shoulder, head, right shoulder. And then if we break that neckline, we can come up further up. See how it goes. But that's, yeah, that's the S&P 500 in a nutshell right now. You can see it does like its inverse head and shoulders, right? You can see one back here as well. Left shoulder, head, right shoulder, bang, up. Which followed by a retracement, but mind you, it was a higher low, so that's a good thing. It seems to me like the chart structure, chart patterns seem to obey the traditional market a lot better. They seem to match up and suit the legacy markets way better than they do in crypto. Crypto is a lot more wild and unpredictable, like with crazy moves. Like this is a really nice head and shoulders right here for a downtrend, you know. You see that? There's an inverse one here. There's another inverse here, pretty much. Little one, but it is there. Yeah, they're all over the place on the S&P at least. There's a pretty nasty one up here. Look at that. So obviously the head and shoulders pattern being a reversal pattern, turning an uptrend into a downtrend. So now that we've got this is actually quite large compared to, you know, other ones that we've had in the past. So this is optimistic, at least, I think, for now. There's probably a few more factors that come into play as to whether this plays out or not, but let's see how it goes. So this is on log as well. Let me just turn that off. Go back to Bitcoin here. So yeah, still struggling to break that 19,700, which is the same resistance we met back here in on the 18th, probably the 17th for you guys in the US. Pretty interested to see how the total market cap's going. I bet you it looks very similar to Bitcoin, as Bitcoin's the dominant crypto still. But yeah, check that out. You could almost say that is the Bitcoin chart, pretty much. what is there to say about total crypto market cap? Let's have a look. So we've similar again, we've broken that structure, that resistance. There was also a long-term resistance here that we were working with. Can't forget that. So we're still underneath that. Oh, let me just lock this in to the point on the chart. Take it to this one because it's a little higher. So that's what I'm seeing here for total crypto market cap. It's, to me, like, and I'm sure for a lot of you guys as well, you can see that it's not only double bottomed, but it's a higher low. So that's the first hint that maybe we're getting a bit of structure change here to higher lows, and we're going to work on the next high, right? Hopefully. If we get above $1 trillion and we get above this, that's going to be significant to say that we've broken that downtrend, I think. And maybe we get some kind of like real rally out of the back of that. It might not be the end of the bear market, but you know, we could rally up and make some money in the meantime while we're waiting for the true bull market to return. So much the same as what happened in 2019 with crypto, right? This relief rally was something that was a decent run. It wasn't an all-time high gaining rally, but it produced a lot of activity in the market for a good, let's see how long it lasted. It was like probably 6 months or something. Well, it went from, let's call it February till basically the end of June, let's say. Yeah, okay. So yeah, about 4 months. 4 months of bullish activity, which is great. It's awesome. It's better than 4 months of flat, like we've sort of just come off the back of. That's pretty much it. I just mainly wanted to come on and show that we've broken that downward structure. And we'll have to see how it fares once the market's open. I think we've got some FOMC stuff coming up in early November as well. Let's just check that. So we've got, let me just turn this on to dark mode so that it doesn't blind you. There we go. All right. So the 3rd of November, so this is Australian time anyway, so 4 in the morning, I'll be waking up just to sort of see if this causes any activity. 4:30 a.m. Yeah, that's not too bad. I'll go to bed early or something. And hawkish, which is what the Fed's been, right? The last few FOMC meetings or releases, they've been hawkish, which means they've been aggressive with their interest rate rises. So it's good for the dollar, good for the currency, which is exactly what we've seen with the dollar index. Yeah, it's been very good for the currency, for those inflation rates going up. So if it's dovish, which means they're being gentle. So if you compare a hawk with a dove is gentle, a hawk is aggressive. You know, a bird of prey. So if we get a dovish kind of approach by the Fed, that might spell, you know, a pullback for the dollar index, and then it might give this crypto market and the equity market, like the legacy markets, a chance to rally a little bit there. Yeah, dovish is definitely bullish. Hawkish is bearish by the Fed, right? But yeah, we definitely want a softer approach by the Fed. Well, that's what a lot of people are sort of whispering about. That's the kind of theory on the street at the moment, is that they're gonna maybe take the foot off the gas at least a little bit, right? Maybe not. I don't know. There's been the word pivot that's been thrown around a bit, which has completely changed their strategy or their approach to their, what they were trying to achieve. But I think with rate hikes, like long-term hikes like that, can certainly crash the economy, like basically put it into a forced recession. So and that harms a lot of people, right? It harms a lot of businesses for that short term, or for the term that they decide to do that for. So, and it hasn't really been controlling inflation, has it? This whole interest rate hiking. Maybe it's slowed it up some. Let me just pull up a. But anyway, the effect of inflation, like to bring that down, it's a long process. It takes a while. It doesn't just come down in 1 month back to normal. It'll take like 12, 18 months to to relieve it. So these are year intervals on the inflation chart right here. The Fed is they've got a target of 2% inflation. Pretty awesome that they've been able to achieve that, on and off, but it's been, for the most part, it's been flirting around 2% for some time. Basically since, let's see, this was, oh wait, these aren't years, these are decades. So these vertical lines here that I have, those are decades. So this was the 80s. It started up this really high inflation, came all the way back down. The 90s was amazing for equity growth, right? The 2000s, after the dot-com boom, awesome. See this little blip here? This is the GFC, right? And then, yeah, the 2010s has been pretty stable as well, all things considered. But yeah, just in this ever since COVID, basically, which was down here, we've sprung up like crazy. It's been insane. So yeah, this volatility through here is pretty immense as far as the inflation goes. Whatever they were doing here, it'd be good if they could repeat that, or even back through here. Look at that. Back through the early 60s. It was under 2% for like a long time, probably like 6 years. That little period through there, I don't know what they did, but excellent time as far as inflation goes, right? Maybe there's a lot of manufacturing in the US, a lot of supply, more supply than met demand, right? But yeah, when demand, when demand grossly outweighs supply, that's when you get inflation, right? Because the retail sector, just as one example, if there's a hell of a lot of demand, you have to increase your prices so that that demand gets met, or you try to slow the demand by increasing your prices. So that's kind of what's happening. There's been this huge influx of money, so the quantitative easing, which is where they print money like crazy. So there's a lot of cash floating around in the economy, right? So that's going to drive demand. Demand's going to be up because everyone's got money to spend. So what do businesses have to do to react to that huge demand is they have to raise prices. So that's why we've found ourselves all the way up here at 9% inflation. And the interest rates rising. See, I only learned this a couple of months ago, or a month ago. So it's been a lesson for me too. But with interest rates rising, that's supposed to slow down people's spending or make things too expensive for people to take out loans, for example, or buy a new car on a loan. If the repayments are going to be too high, people are going to hold off. So that's the idea of to try and slow or curb that demand and get it down. Yeah, it's more complex than that. Obviously, there's a lot more factors that play into it, but that's the gist of it, is what I'm getting. I'm sure Clive probably would be able to explain it way better, but all right. So back to Bitcoin, it looks like we've just got our new hour starting. And so far, we're going to see if we can hold this higher low. That's the first step. This could end up being some kind of consolidation like this. So if you get maybe something like that, like a wedge or a bull pennant, that could happen in the next 12 hours or whatever. Wait, I'm down on the 5-minute chart, not 12 hours, maybe 1 hour. Yeah, it's all relative, right? So if you go out on the hourly, yeah, even on the hourly, it could go for 12 hours where we knock on this, just like we did back here, right? We knock on this resistance until something gives way. But as we know with Bitcoin, let me go back to Bitcoin. I accidentally changed charts there. It can do these where it goes up, consolidates, and everyone's expecting a break to the upside, but it does a Bart-Simpson pattern, right? And then changes the trend. So Bitcoin's kind of notorious for that, like downtrend, bearish consolidation, but then rip up. Like, what the hell? Yeah. You have to be careful with that with Bitcoin. It does it a hell of a lot. Downtrend, sideways movement, up. Uptrend, sideways movement, down, Whereas textbook market structure would say downtrend, consolidation, down. Just like it kind of did it here. See, this is why you can't really count on anything. With Bitcoin, it's very hard to be a pattern trader in crypto because it's almost 50-50, the chance of it working. So it's almost useless, right? Looking for those kind of patterns anyway. And I think that's because Bitcoin and crypto doesn't trade off its own sentiment yet. It, unless it's in a extremely strong bull market, or the trend is really obvious and it's like a downtrend with really strong movements, right? If we're just chopping sideways, it draws its sentiment from other places. And that's kind of like what I feel is happening here. And then on the very short term time frame, like if you go down to the 15-minute chart, 5-minute chart, it's just all of the basically the liquidity providers, the so-called market makers, or the whales, right? They're just driving the price up and down to seek liquidity, so liquidate people, in other words. So that's why it is very dangerous trading, like day trading crypto, because you're basically playing against these, they're not even traders really. They're there to do one job, and that's provide liquidity to the market. So, give volume on the buy and sell side. And then what they'll do is move the price to grab the most liquidity back from traders. So, yeah. And there's a way to beat that, and that's to reduce your leverage, right? Don't trade on such high leverage. And yeah, until you get a lot more sophisticated with trading, and you know the traps, and you know what to look for an entry and an exit. Until then, yeah, maybe even just trade spot, but low leverage would be the easier way to approach that. So anything 5x and below, but if you've got some experience and you're happy to risk it, that's when you can like dial it up a bit. But yeah, obviously, if you have been doing that and you've been profitable, then that is you can pretty much pat yourself on the back there, because this market is very ugly right now for trading. It's so choppy and unpredictable in direction. There is no like trend yet. We've just been flat ranging. So if you were to ask a professional trader, or like, they don't like to trade through these flat kind of conditions, right? They want a trend. So back here it was a lot easier, right? Because there were trends, like there were shorter term obvious directions, right? Up or down. But for the last 2 months, it's been just very messy and noisy and hard to pick what's going to happen, right? So it wouldn't surprise me if we met resistance here and came back down again, or even up here and then retraced again, right? And this is all just games of getting people excited and then basically disappointing them, and then rinse and repeat, right? Pushing it to a level just enough to get enough people trapped, and then snap it back the other way to get them stuck. All the while never recovering that previous high level that they pulled in, so the people can't get out, So we haven't seen a macro higher high in quite a while. It's the last higher high we've had was back here from this structure. High, high, higher high, higher high again. So we've been pulling in nothing but lower highs since that time. Well, on the higher term time frame. But I don't know, if you've been playing it anywhere similar to the way I've been playing it, I've just been buying in this entire zone. So I've treated this entire zone as a buying area. I have stopped buying for now, so I'm pretty happy to sit on what I've got at the level that I'm at. And if I go, wait, one moment. If we break this structure and come down to the next level, like if we break our long-term support back here and start consolidating at that next low, that's when I'll start buying again, and heavier than that first time. Thanks for the new subscribe, whoever that was. Appreciate that. Yeah, but yeah, if we start moving up from here, then it's a win-win, If we break down, you get to buy more. If it goes up, you start going into profit. So in either direction, there's something to do, and it's a good thing. The thing you don't want is like 12 months of this, of just flat, like stablecoin type crap. We don't want Bitcoin to turn into Tether or USDC, right? Anyway, that's pretty much all I had to really cover. The rest is just watching and waiting to see what happens. So by the next time I stream, hopefully we get an answer as to, you know, where at least the next macro move is going to be. Fingers crossed it's not just more of the same flat activity, but yeah, we'll see how it goes. Anyway, thanks for tuning in, guys. I'm going to wrap it up there. I know usually I take it past the open of the market, sorry, the close of the daily candle for Bitcoin. Today's candle's been pretty good, up 2% so far. Hopefully it closes strong. If not, you know, or even better, if it closes above 19,700, that'd be amazing. So this final 50 minutes might produce something exciting there. All right. Yep, it's just a watch and wait type situation now. All right, guys. Thanks for tuning in once again, and check out, by the way, in the description for this stream, you'll see a link to B's crypto, like, so B Crypto live. He has a live stream that has a Discord community attached to it, and it's pretty much like a radio station, listening to the radio for crypto, right? They're not always on topic, right? But at least it's something to watch and listen to while you're watching the charts. So check it out. It's in the description there. And anyway, I think most of you pretty much would be privy to it. I think, yeah, everyone watching right now probably is part of B Crypto. So hello to you guys. I'll pop in at some point and say hello. All right. Thanks for tuning in. I'll catch you next time. Peace.